We've moved this company from a cell-based approach to a broad global strategic category approach. We've moved this company from a country dominance to a fairly well-balanced country and category focus. We've moved this company from an internal culture to an increasingly external culture, from being an employer to being an employer of choice, from being short-term to definitely having a longer-term approach. As was mentioned yesterday, from fearing competition, which I believe was often driven by the fear of our own failures, to actually being in charge of our own destiny, from being sometimes too slow and bureaucratic to being increasingly leaner and more agile, from managing or disposing brands to actually dynamically creating the portfolio of the future and driving our innovation levels to levels that we've never seen before. In short, we've just simply focused on putting all the pillars in place that ensure this long-term multi-stakeholder success that I'm talking about, including the many decisions over these 10 years that might not have been in the interest of our shorter-term results. Our pension plans are now balanced, probably one of the few companies in the world of this size. We've moved it to direct contribution instead of direct benefit. Many companies will have serious problems in 15, 20 years from now that many in the financial community, unfortunately, are still not factoring in. But a clear example of always trying to do the right things for the longer term. However, it's also very clear to me that whatever we've done and put these pillars in, which I'm glad to hand over, that is in a fast-moving consumer goods industry is absolutely no guarantee to success. We have to maintain this mentality of good enough never is in anything we do. We have to maintain this mentality to some extent of being a little bit paranoid in a positive sense if you want to survive in this industry. And that is obviously what we are trying to do and what we're trying to convey to you in these last 2 days as well. But I do say, without too much arrogance, hopefully, that we feel confident. That's probably the right word. That we feel confident that we're actually better prepared than ever to face the next decade. And I hope that confidence is shared with you, having here been with us and sharing some of these stories a little bit more in detail over the last 2 days. Our strengths, obviously, in the emerging markets is one of our competitive advantages that is next to none. There's no coincidence that we are here in India right now to celebrate this wonderful investor meeting and get together. It's also no coincidence that we are celebrating that nearly at the same time as we are acquiring one of the stronger and most beautiful equities again in India with the Horlicks brand. But the strengths of India and what you've seen this afternoon or this morning with Bangladesh and Pakistan, 2 of our amazing subsidiaries, by the way, is basically what Unilever is about and what the future of Unilever is about. Look at this chart that Sanjeev showed me yesterday when I was talking to him, and he would be too modest to put it up, and he's too embarrassed of me talking about it. But this was HUL from 2000 to 2012. It saw the share price actually increase on average about 8% a year. And the market cap increased 2.5 times. About $10 billion of value was created. And we were happy with that. HUL was our best performing subsidiary. Yet the reality was we were performing well below the sector. Then you look at the last 10 years. We really started to outperform. The share price increased 26% per annum. And the market cap more than tripled to 55 billion. In fact, our business tripled over that period nearly. 2 times more created than we had created since 1888 being here. That's the strength of a company. And some of you might say, that's the distribution system. Well, I have good news and bad news for you. It's partly the distribution system, but if that's where your thinking stops, you've missed the point of the last 2 days. It's one of the best organizations in the world. In fact, it was called the 3rd best organization globally for developing leaders. And boy, do we see that. It was actually called out as the 8th most innovative company globally, with all the others before them being tech companies, which you would expect nowadays to be on the list as that's in vogue. This is an institution where the depth of the sales results or the distribution is a result, not by itself, this competitive advantage. This is an organization able to reinvent itself all the time, and set the standards of what it means to run responsible business in countries like India. So, ladies and gentlemen, it's a wonderful example of how well we are placed to face this future. You've also heard yesterday from the divisions and their strategies. You've heard from the CCBTs, increasingly the core drivers of our individual businesses, and you saw some of the wonderful country heads that we have. And each of them consistently was talking about the purpose-led and future-fit business model that increasingly is being leveraged under a structure that balances the pressures of being global and being local at the same time. They've talked about how we are transforming parts of the organization to embrace, actually, these enormous opportunities and challenges that we have. Digital being the most important one right now as the topic of the day that you're all interested in, and what it takes to fast implement and become a digitally ready organization, what it takes to fast reskill our own people, to bring in talents and retool the systems that support our growth. Now, I'm glad that we've taken the steps that we did. We developed, without any doubt, a more energizing long-term multi-stakeholder vision for this company that is captured very well in the Unilever Sustainable Living Plan, resulting indeed in businesses that are truly purpose-led. And I hope that by now we have shown you and many more companies that are starting to follow us that this drives performance, that this gives competitive edge, that this is one of the best guarantees you can have for the long-term success of this company. We've also brought the center of gravity back to our brands and categories. That's absolutely important. It's the brands and categories and our innovation capabilities that drive the long-term growth of this institution. But at the same time, we have retained our focus on the markets. We've done all that by structuring in 3 divisions, which allows us actually to leverage the size and scale of this enormous company, but also to have much sharper and more focused strategies, streamlined portfolios, and leading brands that allow us now, with accelerated innovation, to grow ahead of the markets. We continuously work our organizational structure. That will never finish. That should actually be an ongoing project anyway. At least that's what we make clear to the people in this organization. But it is without any doubt more agile and leaner. And with the C4G organization, which still has a lot of momentum and opportunities to be embedded in the organization, we're just barely scratching the surface of that. I think we're well placed with our organizational model, especially at a time when we see many of our global competitors struggling with finding that right balance with how you run a global and local organization in these volatile times. It's also underpinned by ruthless focus on people, values and capabilities. Lina talked about that. It's probably where we put most of our investment, often most difficult to describe. It's actually said that unlike about 50 years ago when 75% of a company's value was on the balance sheet and you could read it, now 15 to 20% of the company's value is on the balance sheet. And you increasingly struggle to value companies like ours. But culture and people is probably one of the biggest drivers of the longer term success. I hope you got a little bit of a feel for that from the presentations that Lina shared with you. And all of this has resulted in fairly decent results. I'm still embarrassed to tell it to my 90-year-old mother and explain to her that we could do all these things, satisfy all these stakeholders, and at the same time give our shareholders a 290% return when the cost of money was 0 in a 10-year period of time. She didn't get that return on her pension. Most people that we serve haven't seen that improvement. But we did. We gave you a 290% return, and that put us in the top tercile of the peer groups that we compare ourselves with, driven obviously by consistent growth above market growth. It also shows that it is a better model to run your business on growth in consumer goods than just ruthlessly focused on cost cutting and shareholders only, which, by the way, is a very easy thing to do. I wouldn't have done that job, by the way, because I would have found it boring. It's not why you hire CEOs and pay them the way you pay them. You pay them to do long-term value creation. And by the way, every once-off benefit that you get in cost cutting is totally different than the long-term benefits you get from investing behind your brands, people, or market development. Those are the investments that ensure the long-term cash flow that you should be interested in. And I think that's increasingly playing out if you look at us and some of the others in the marketplace that pursue a different strategy.